The U.S. banks appear to be long. The European banks appear to be the ones left holding the bag. JP Morgan appears to have gone wickedly long. Over 750 million ounces closed out its short position. Things are happening at a level we've never seen, and to see millions upon millions upon millions upon millions of ounces coming into COMEX every single month tells me that the people pulling those strings, they are the most well-funded, yes, but more importantly, the most well-informed traders on the globe. People should pay very, very close attention to that as far as I'm concerned.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for December 15th through December 22nd, 2025, while supplies last. First this week, half-ounce gold U.S. Eagles are just $170 over melt per coin. Next, 2026 1-ounce silver Canadian maple leaves are just $5.75 over spot per ounce. 100-ounce silver bars dealer's choice are just $2.25 over spot per ounce. And finally, call and ask about our Christmas special on 90% junk silver. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you. Welcome, everybody. I'm Kaiser Johnson with Liberty and Finance, licensed precious metals broker for Miles Franklin Precious Metals. Today, it's our market update, and we're joined by Miles Franklin CEO Andy Schectman to answer your questions and give us kind of the rundown on what's going on in the metals markets and worldwide right now today. It's Monday, December 15th, 2025. Andy, welcome.
Good to see you, brother. Been too long, Kaiser. If I had a bloopers reel of how many times your dad has goofed up that intro and forgets the day, forgets the month, it would be a good end of year thing to show. It's very funny. Normally the hardest part of our interview is what you just pulled off flawlessly. It's good to see you, buddy. Happy holidays to you, your family, of course, everyone out there, and glad to be here, man.
Well, thanks for being here, Andy. And let's kick it off by starting talking about, there's been a lot of buzz recently in the U.S. here about this idea of green confiscation and what's going on with silver right now. And maybe you could lend some insight to that.
Yeah, I saw the video that everyone's talking about. I do believe it is AI generated, number one. Number two, I found a lot of flaws and material flaws in what he was saying, and I'll certainly go over that. But when we talk about the way gold was confiscated in 1933 during the Great Depression, it was done because the gold standard was tied to monetary policy. It wasn't about environmental or energy policy. It was monetary policy. It was a much bigger deal back then. I looked up HR 9847. It's a law with mandatory private reporting. Excuse me. That's what he's saying it is. Law with mandatory private reporting of strategic metals tied to energy infrastructure. That's not the case. In fact, what HR 9847 is creating Early Childhood Leaders Act. And it will amend the Higher Education Act of 1965. So first of all, the bill number is not correct. And what had happened with metal being classified as strategic or critical mineral, it was done by executive order. It was not done by a bill that was submitted to Congress. It was an executive order by President Trump. And if you dig through the bill, if you dig through the executive order, it focuses on agency actions to expedite permitting and energy infrastructure projects. It does not include provisions requiring mandatory reporting by private companies or government acquisition of private resources or reserves. And in other words, I believe it was, if anything, misinterpreted. Now, he says things in there that are just flat out not true. He talks about a Form 8300. Now, Form 8300 would be if you brought your whole family, Kaiser, to Nordstrom's and bought everyone, their whole wardrobe for the year, and paid over $10,000 in cash. pay $11,000 in $100 bills, Nordstrom's is going to issue a Form 8300. Or if you go to a Ford dealership and say, I want to pay as much cash as I possibly can, well, they might say you can pay up to $10,000 with no reporting, but anytime you go over that, you will get a Form 8300. And that's in any retail capacity. That's just, where did the cash come from? What's your social security number, the number of the bills that you're using. And it's an ugly form. I've filled it out for clients before. But if you have, a income stream that you report through your taxes that would match your ability to come up with that kind of cash, you'll probably be largely ignored. It's the people who don't have that who all of a sudden show up to spend $20,000 on something that may get questioned, if you will, by a couple of guys in trench coats the next day. But when you buy physical precious metals, there is no Form 8300. You can spend $100 million with a wire or a check, and there is no Form 8300. In his video, he says there is, and that we have, as dealers, precious metals dealers, have an obligation to submit it to the government. Not true. And so some of the things that he is saying, I take exception with. In a previous video, he had talked about how the dealers were all out of product. Not true. So while some of the information is good, it just flat out isn't true. And at least the part about confiscation. And not only that, the act itself is not true. There is no act that he speaks of. So, I think that you have to take it with a grain of salt. And you don't do anything out of the ordinary to try to hide yourself in terms of structuring transactions below 10,000 or any of these things, because I think it's you cast more light upon yourself doing it that way. There is no bill or intention to confiscate silver the way that Roosevelt did with gold in 1933. So anyways, bottom line is I wouldn't worry about it at all. And I don't think it's true. It's misinformation on top of some good information. Some of what he says is good, but as far as silver being on the chopping block, it's not true.
Right. And I mean, broken clock is right twice a day anyway. And one thing you've also pointed out is, you pointed out before a lot of these differences between the monetary and economic conditions in the 1930s when we're on the gold standard, and there's this direct correlation between the U.S. money supply and gold versus now. This is a really different sort of a question. You've also pointed out that in an extreme case, wouldn't it make sense that if there was some kind of a need for more silver, that the exchanges have ostensibly millions of ounces of it, rather than the government going door to door and knocking and trying to get it from, a 0.5% of the U.S. population. And since Miles Franklin doesn't, we're not required to report any of these just ordinary purchases, that it would be a lot of manpower needed to try to sift through all that and figure out who had it and that sort of thing.
Well, yeah, I mean, and you have J.P. Morgan and BlackRock as the custodian of the world's largest silver trust, SLV, the same company who paid a $920 million fine to the Justice Department for suppressing or spoofing the metals market, is allowed to be the custodian, along with their pals BlackRock, of the world's largest silver trust. You would think it would be far easier and more palatable for the world when they look at the world and say, well, what? All we did was close SLV. Unless you have a basket, which would be millions and millions and millions and millions of dollars worth. These are the people that actually fund the account typically, like the commercial banks. None of us can take possession of it anyway. So it's an asset that tracks the price, or it's an ETF that tracks the price of silver. And not even that great at that, but it is the largest silver trust in the world. And it would be far easier for J.P. Morgan to close that account, pay everyone their fair share of what their account was worth at the end of business on Friday, and say to the world, all we did is what the prospectus allows us to do. Now you're sitting on a huge stockpile of silver without breaking any laws or infringing any civil liberties. And, it gets interesting when we talk about J.P. Morgan, by the way. The Economic Times just came out with a report saying that they hold over 750 million ounces of physical silver. And that's worth more than $40 billion. And it would be the largest stockpile on the planet if that were the truth. The report is very interesting. It says they didn't just stop shorting silver, they actually flipped and became the biggest long in the market. It said that in 6 weeks, JP Morgan added 21 million ounces while closing a 200 million ounce paper short position. So by removing that paper short, they remove the pressure that keeps the price down. And while buying the physical metal, well, this is going to push prices up much higher. They also mentioned that they took 16.6 million ounces out of the registered inventory, and it left COMEX completely gone. We don't know where it went. And when 16 million ounces leaves COMEX, it ain't coming back ever. That would be my guess, in industrial. Silver is what's called a Giffen good. What Giffen good means is the higher the price goes, the greater the demand. Most assets don't work that way. They say the cure for high prices are higher prices. Not with silver, because you have the industrial component of it where you need it to make your Tesla, you make your iPhone, to make your solar panels. And Samsung, which is one of the things you and I talked about offline there, the rumors are that, yeah, they've been flying around, or Samsung flew to Mexico and to strike a deal. But this is what a Giffen good would be. If you need that silver, and it's called inelastic, by the way, silver is inelastic, which basically means you only need $30 worth of silver to make a $1,500 iPhone. You don't care what the cost of silver costs. You need it. And it represents a very small price, or a little bit in a high-tech, relative in terms of its cost. A few hundred ounces maybe in a military grade missile that sells for $5 million. You don't care what it costs. You must get it. And so you get all of these entities fighting with one another, so to speak, a battle between the industrials and the investors. So when you see that kind of metal actually move and leave the marketplace, it's something to watch and be very cognizant of. They also talked about the fact that they moved somewhere in the neighborhood of like 166 million ounces of silver. They moved it 169 million ounces of silver, and they moved it into what's called a non-deliverable vault. Now, this was something that was new to me. I dig in a little bit because I thought either it is or it isn't in the COMEX ecosystem. And it technically, these 169 million ounces, technically they still exist on paper and could be moved into COMEX, but it's legally removed from the delivery system, and it cannot be used for COMEX settlement unless it is re-registered. So, not only have they accumulated 750 million ounces of silver, and they have forever always been the biggest short, but they've flipped from short to long. They added 21 million ounces while closing a 200 million ounce paper short, according to this article. And then at the same time, 16.6 million ounces left the registered category, left the building. Goodbye, silver. And 169 got moved into vaults outside the COMEX deliverable status. This is not defensive posturing at all. This is intentional removal of metal from the delivery pool. And if it is true, it marks a huge shift from suppressing silver with paper to accumulating physical metal. And you want to talk about bullish. At the same time, and you can stop me anytime here, COMEX deliveries have been unusually large all year, Kaiser. In November, which is typically not a delivery month, we had almost 17 million ounces of silver and about 1.5 million ounces of gold that were delivered. In both cases, gold and silver, it's not a delivery month. By just the 12th of December, deliveries have already reached 58 million ounces of silver and almost 3 million ounces of gold, with contracts still being added daily. Now, ask yourself this question, and this is what I've been trying to scream to people. I don't care what the price is doing. It doesn't mean anything. What does mean something is that the people who in just a handful of days deliver, 58 million ounces of silver and almost 3 million ounces of gold. Who's got the money to do this? You're talking billions and billions and billions and billions every single month, right? Since November, 13 months we've seen this, since last November. The people at this level who throw around that kind of bread, they don't do it just for the hell of it. They know what's coming. They do, and they position ahead of the crowd. Now, one way that they're trying to stop the run on all of these deliveries, because there are some banks that are offsides, to slow things down when registered silver continues to leave the COMEX, and when it does, it's gone completely out of the system. And as metal keeps draining, COMEX does what it always does. It raises margins. And now because prices are running too hot, or not because they're running too hot, but because the delivery pressure is becoming too much. It's building. And so higher margins force levered traders to sell, people who are on margin. And it would typically shrink open interest, meaning open interest is who's got long contracts that could stand for delivery. And, one of the things that, to me, if you look at it as a kind of a pressure release valve for physical delivery, it's not about the price. That's what people think. It's the price is getting too high. No, not this time. I think it's more about all of the deliveries and the people on margin who stand for delivery. They have to unwind their position. But, the idea is get rid of paper claims faster than the real metal leaves, right? But it's not working. It's not working even with lease rates right now around 7%, which are way above normal. It's because the people that are buying this stuff right now are not on leverage. People that are buying this stuff have lots of money, and they're standing for delivery. It's kind of like, if you live in a really fancy neighborhood in a gated community down here in Florida, and there are a lot of them, people coming in to buy houses there are not taking out mortgages. They're coming in and paying with cash. And that's why higher mortgage rates doesn't affect the property in those areas. It's the same thing here, is that rising lease rates only affect those on margin who are trying to use leverage to achieve what they're trying to do. But that's not happening here, because the buyers that matter, well, they're not leverage traders, and they're industrial users, they're long-term holders, they're sovereign wealth funds, they're central banks. And so all this really did was move the silver from the weak hands to the strong hands who came in and bought it. And you can see that because normally when they raise margins, price collapses like that. Not this time. In fact, it came right back up. And here we are today. This happened on Friday, and here we are today. Silver's up over $2 again to over $64. And so what was supposed to scare the market just turned in, to kind of a shakeout rather. And the leverage got cleaned out, and the available silver got tighter, and the price floor got stronger. Something to think about. And this is happening at the same time rates are rising in London again. Lease rates there about 8%. And again, you're talking about how London silver has been the linchpin of all of this, where their paper claims are backed by very little metal, somewhere around 2 billion ounces of paper claims backed by about 140 million ounces. And that used to work when no one asked for delivery, but now they are. And this is a big, big problem. And there's something that caught my eye, because I've talked about this a lot. I've talked about Tom Luongo's theory that, and I like to give him credit because he's the one who came up with it. But when I think about it and put all of these pieces together, I'm thinking to myself, man, it's interesting. Now, Tom says, that Trump was upset with the European aristocrats because he believes, and the Bank of England, that they were involved in election interference 2016 or 2020 rather, and the color revolution, all aimed at, keeping Trump out of office. And I want you to think about a couple things and tell you what I see right now. And again, this isn't my theory, but when I put the pieces together, some of these I didn't hear from Tom, but I think about them and put them in. I'm like, yeah, wow, that's got legs. So let's just pretend he is mad at the Bank of England. He's trying to stick it to him and the European banks. the old money, right? Because one of the things he is trying to do is take money creation away from the Fed. And we'll get to that in a moment. But anyway, so the first thing that he did was to bring all this gold and silver back. Now, for years, gold and silver has flown back and forth between the COMEX and the LBMA, and these Western banks were in concert together to suppress the price of gold and silver. Now, silver, I would argue, was suppressed for the military-industrial complex. That wasn't just the United States. It was France. It was England. It was all of the, all of the Western countries that had strong militaries that used that to keep their thumb on the world, so to speak. And at the same time, gold was used to hold down the price of gold, largely through futures contracts where they go short in New York to drive the price down and go long in London to offset their books. And metal would flow back and forth. And this was done in cooperation between all of the banks in the West. Gold was held down because of something called Gibson's paradox, which speaks to the inverse relationship between real interest rates and the price of gold. So if the West suppresses interest rates for 30 years to create an illusion of prosperity in our 401ks and our house values and keep everyone, borrowing from the bank, using currency, buying bonds, all of the things that the Western bankers would want, you step on the price of gold, right? So this has been going on forever. Well, Trump says, we need to bring all of this gold back because there's tariffs and silver. So, don't worry, it'll all flow back. Well, the tariffs aren't there for this. This was about reshoring, right? So all of this metal has come back, leaving the Bank of England rather vulnerable in terms of the LBMA, in terms of the short positions that they have. And this is a big deal, right? Because you have 140 million ounces, but contracts that say 2 billion ounces can stand for delivery. Where's it going to come from? This is an existential threat. That's number one. The second thing that happened was the move, in my mind, to issue the Genius Act. And the Genius Act, well, before I even talk about the Genius Act, let me just say when he came out with the Epstein, so we're going to release the Epstein files, he specifically cited JP Morgan as being involved. Now, that's the old money. JP Morgan is the old money. They represent the old European banks. That is the old aristocrat money. They're all tied together, right? He specifically mentions them. The third thing he does is pass the Genius Act, which allows the Treasury to issue, in essence, create money through stablecoin issuance backed by U.S. Treasuries, giving the Treasury more power, taking it away from the Federal Reserve. Now, this is what a lot of people think got Kennedy killed. So again, the Federal Reserve, the old European aristocrat money that stands behind all of these banks, right? So you got this, all the metal coming back, lying about tariffs to reshore it. You've got naming JP Morgan in this suit. You've got the creation of money, in essence, through taking it away from the Federal Reserve, giving more power to the Treasury, and all of this at the expense of the Bank of England. Now, and the banks in Europe, and what's very interesting is that if there was just a report which lets me believe that he is going to leave the European banks holding the bag on the silver short position, which peaked in July, right? And since then, the 5 U.S. banks involved have slashed their net short exposure from 28,918 COMEX contracts to just 6,797 by the end of November. And that is a reduction of over 22,000 contracts. Some of the non-U.S. banks have also reduced their shorts, though less aggressively. But in short, banks have been actively in the United States covering silver short positions since July. And this is likely, continuing through November and December, where U.S. banks appear largely, if not entirely, out of the silver shorts, leaving the foreign banks and other commercials with most of the remaining exposure. And so if this all blows up, the U.S. banks have gone long. The European banks are the ones that are exposed to all of this. So thinking about what Tom Luongo says, all of these things negatively impact the Bank of England, the LBMA, and all of the European aristocrat or old money banks. So just something to think of. Almost done. Starting January 1st, 2026, silver exports will require state trading licenses from the authorities in Beijing. This matters because China roughly refines about 70% of all the world's silver, not just from its own mines, but from doré imported globally, refined in China, and then historically re-exported to Western markets. That pipeline shuts down in less than 2 weeks. And if you look at everything happening at once, this is way bigger than monetary policy or investment demand, Kaiser. What we are seeing is a strategic resource competition between great powers with industrial demand that is slamming into a constrained physical supply. You got supply shocks from export restrictions like we're seeing, stress inside of the major exchanges like we're seeing, and at the same time, the largest player in the market flipping from short to long. And that makes this very different. This isn't financial, this is geopolitical. And this is about who controls the materials needed to build the modern infrastructure. So I know on one hand, I'm saying JP Morgan just got all this silver as a US bank, but on the other hand, is JP Morgan more US or are its roots more in the European side of things? All I can say to you is this, that the US banks appear to be long. The European banks appear to be the ones left holding the bag. JP Morgan appears to have gone wickedly long. Over 750 million ounces closed out its short position. Things are happening at a level we've never seen. And to see millions upon millions upon millions upon millions of ounces coming into COMEX every single month tells me that the people pulling those strings, they are the most well-funded, yes, but more importantly, the most well-informed traders on the globe. People should pay very, very close attention to that as far as I'm concerned.
Yeah, it sounds like there's a lot going on in those markets. I'd like to touch more on, if we can. You briefly mentioned China and some of the stuff going on there, and I'd like to talk more about the BRICS real quick, since we're well into this, and we'll get to the viewer questions in a little bit as well, but so stay tuned for that. But love to talk about the specials we have this week real quick, and then we can jump right back into it. Our first special this week, we've got the half-ounce U.S. Gold Eagle at $170 over melt per coin. Hear more about that from you, Ken.
Yeah, I mean, I think, first of all, if I had my druthers, I would only buy American-made coins, and whether they be old or new, the pre-33 or these. And whether you're playing poker with your buddies or driving on a crowded highway or investing, you can never have too many outs or options or exits. And the same thing is true here with the enhanced flexibility. The half-ounce American Eagle usually trades at a much higher premium than this, and it's a good choice. And it's a good choice because with gold going higher, and I think it'll go much higher. I think we're just beginning to see real price increases, but having the added flexibility, of course, they make them in quarter and 10th ounce as well. But I think the smaller the unit, the greater the liquidity. The problem is the premiums usually are higher, mint imposed, not dealer imposed. These are much lower premiums than we would typically see. I think it's a very, very good choice, to be honest with you.
Great. And our next special is the 1 ounce silver Canadian maple leaf. That's the 2026 coin. So those are 2 to 3 weeks right now for delivery, because we'll be into the new year before those really start rolling in. But those are $5.75 over spot per ounce.
Yeah, I mean, look, you're dealing with a silver eagle market that is getting tighter and premiums going much, much higher. The next best choice on a sovereign coin, at least here in North America, in my mind, would be the Canadian maple leaf. That, along with the Australian kangaroo, are the only two 9999 pure, 49 pure silver coins in the world. In essence, it's the purest silver coin in the world. It has the micro engraving, anti-counterfeiting properties into them. They come in boxes of 500, tubes of 25. they probably make the finest product in the world, the Royal Canadian Mint does, and a good choice as well here in North America. I think that if you didn't buy the American Eagle, the Canadian Maple Leaf is choice 1A or 1B rather, and one of my favorites.
And then finally, we've got the 100-ounce silver bar. It's dealer's choice at $2.25 over spot per ounce.
Yeah, and I think this goes to show that, premiums are starting to go up on some stuff. Bars in particular, in my mind should be cheaper than that, but they're not because of the threat of tariffs all year long. Most of the bars coming from Switzerland, typically, there weren't that many imported because of the threat of tariffs. So I like them, and it is a low-cost way of doing it. And I think if you can buy the 1-ounce Buffalo rounds for the same or similar price, you might be better off. But for people who want 100-ounce bars, this is probably as cheap premium-wise as we've seen them all year. Look, whatever you're doing, if a lot of this stuff that we are seeing is true, this is just the very beginning. So you want to accumulate whatever you can at the best price. Never go much bigger than a 100-ounce bar in silver. You end up being penny wise and pound foolish. So good value. And quite frankly, I think anything that people are getting right now is appropriate. I think the best of what silver is going to do price appreciation wise is still in front of us.
It's interesting you say that, because I know, I was looking back at just orders from a month ago, and we've seen, silver go up 20%, 25% since then. And so this certainly lends credence to that idea. And with what you're talking about this way that JP Morgan has flipped from short to a very long position, lot of room for growth there. So back into the question of now moving from European banks to the BRICS, and questions about the G7 and China and Russia and what they're doing. If you could touch on that a little bit, that'd be great.
Yeah, the BRICS are expanding. I think they right now have 50 countries have expressed interest in joining the BRICS. 23 have formally submitted membership applications, and 28 have expressed informal interest. We are seeing right now an expansion of the Shanghai Metals Exchange network. The first one was built in Hong Kong. The reason that is important is because when gold leaves China, it has to leave via Hong Kong. And what they're doing is internationalizing their yuan. That's what they're telling us they're doing. But it's, in essence, they are building the rails of the unit, the BRICS settlement currency, which was just, in essence, activated a week or two ago. We saw the first trade on the unit over the Bridge network between United Arab Emirates and China, where it is a cross-border settlement system that is the Bridge, where it trades in 7 seconds outside SWIFT interference at a 98% reduction in fees. SWIFT is not compatible with it. In other words, no sanction risk. And it will trade this thing called the unit. The unit is 40% gold-backed deliverable to central banks on demand, 60% basket of BRICS plus currencies. What's interesting about it is that the currencies will be measured in gold ounces, not gold measured in currencies. It's a new way of looking at things. In other words, gold is the benchmark in this new system. But anyways, they're calling it the internationalization of the yuan. The BRICS will slide right onto this, their unit currency. But what the Chinese are trying to do is build all these vaults, the first one in Hong Kong. So if China were to buy oil from Saudi Arabia and pay for it in digital yuan, trade over the Bridge platform, settles just like that, Saudi Arabia can take that digital yuan and send it back to Shanghai and request delivery out of Hong Kong, take metal right out. And China has made the yuan immediately convertible into gold without converting back into dollars. They have effectively said our currency is as good as gold. Not backed by gold, but they're allowing instant conversion without switching to dollars first. The second vault is now underway or in construction in Saudi Arabia. Well, that's a big deal. Saudi Arabia was also the 5th participant in the M-Bridge technology, which is the cross-border payment system that sidestepped SWIFT. And they plan on internationalizing these vaults all around the Belt Road Initiative, and expansion all around, the Southern Hemisphere. So countries will trade in local currencies, settle any trade or currency imbalances in gold in all of these multi-jurisdictional vaults, and take possession if they want. The unit currency will slide on top of that, which will be used for settlement currency for central banks and very large institutions. BRICS Pay is the B2B side, the retail side, where if you live in Brazil and travel to China, you can immediately use this credit card or this app and bang, it just allows seamless purchases. That it too is being expanded to the Belt Road Initiative. This is not just a BRICS endeavor. They're opening all of this stuff up ultimately to the rest of the world, with the exception of the United States, Great Britain, and the European Union. So it is, one of the blind spots that the naysayers have is, it's not big enough. Yeah, it is big enough. You're opening it up to 90% of human population, and the Belt Road alone is 75%, where the BRICS bridge, which is central bank to central bank, will operate through this whole ecosystem, settle imbalances in gold through all these multi-jurisdictional vaults. Same thing with the BRICS Pay, where it will start with the Belt Road Initiative, where they are now opening up an infrastructure that's 75% of human population as is. Anyways, that's growing. But then something popped up. So I wanted to lay that foundation. There was a report, a unpublished draft of U.S. national security strategy that is circulating out through through Washington. And and according to Politico, this is where I read it in the Politico website, that the idea is something called the Core Five. And although officials have kind of denied that there's a formal plan, the fact that the idea surfaced at all is very revealing. To me, it's very revealing. And the proposed Core Five, this is coming from the White House, would include the United States, China, Russia, India, and Japan. And the idea is not about shared values. It's about scale related to population and economic weight, military power, energy demand, and geopolitical stuff. So, even if it never becomes official, to me, the message is clear that the U.S. no longer sees the G7 as a place where maybe real power is managed. And for the rest of the G7, in particular, Europe and Canada, this is a full-scale demotion. It's also an admission in my mind that the BRICS have already won the argument about, multi-plurality instead of unipolarity, where everyone is, in essence, using the United States currency and unipolar, where they're using the U.S. currency and the treasuries. This is about everyone using their own currency, settling over a system that is not SWIFT imposed or SWIFT compliant, and trading imbalances in gold and saving in gold instead of in treasuries. So the debate now, in my mind, is, whether the world, in terms of whether the world has changed. To me, that's already happened. And this says it. To me, it's more along the lines of who writes the rules. And I think when you see gold in all of this, it is the neutral asset of choice. Just whether it be by the massive amount of gold coming into the U.S. every single month, we're net importers, billions every month and billions. And you can see it as underpinning what's happening in the global South. It won't be because of a dollar outright collapsing, but because the world no longer wants to rely just on one single issuer. And that issuer has the ability to sanction you and freeze you out of the system if they don't agree with you. And so this is happening. And all of these things point to why, if you save in dollars, Kaiser, you're destined to go broke. And I think gold and silver, you don't buy them to get wealthy. You buy them because they are wealth. And it seems as though it is the neutral reserve asset of choice by the big money across the globe. So I'm glad you asked that question. I think it's a very big deal.
Yeah, it sounds like it. And we have a number of viewer questions about a lot of this kind of stuff going on. Would it be all right to jump into
Please,
those right now?
Let's do it. Yeah.
So, first we had, I would say, the most viewer questions about that idea of green confiscation that we first talked about as our first topic on today's thing. So you've done a really good job of kind of addressing that, and then I would say the second most number of questions we had was on again the Samsung question of, is Samsung in Mexico dropping all this stuff down? It's interesting. We see that the kind of two biggest splashes here are these what appear to be AI generated rehashes of other things with a lot of misinformation, and then just layered on top of some real information. So when we get to I think questions about stuff that we're actually able to source and has real good data behind it and that kind of thing, we've got questions on the BRICS, and is there any more information on James Pajoli asks, is there any more information on the BRICS monetizing silver? We talked a lot about gold here. Is there anything about that you can?
Well, I mean, look, Saudi Arabia bought a huge chunk of silver, and ironically, they bought it through SLV, but the amount that they bought allows them delivery ability. India has been the largest importer of silver in the world for the last several years. Rumors are they have as much as 800 million ounces. China, as we know, is the second largest producer in the world. David Morgan went on a mine tour there, and the authorities said, yeah, we're number one, but let's just say they're number two. Mexico's number one. It's interesting that supposedly Samsung was in Mexico. Now, they came out with that solid state battery technology over a year ago. We were talking about that. So the fact that they're now saying this, I wonder if it's true. And his sources were in the logistic industry who have never been wrong. I don't know if I believe that or not, but I do believe that there will be disintermediation. And how can I say that? Well, China, as an example, and this isn't rumor. I've spoken to mining executives, Sean Kun from Dolly Varden. Yeah, Andy, the Chinese have been flying into Peru and into Mexico and taking metal in the pre-production stage before it's even called silver. They're buying doré and concentrate. So China, the number 2 largest producer in the world, flies all the way to Peru and Mexico, the number 1 and 3 largest producers of silver in the world. Mexico, China, Peru are the 1, 2, and 3. And they're buying doré, which are bars that are crudely refined by the producer or the miner, and then sent in for full refining to a refinery. And the concentrate is a sludge byproduct of the mining process. They're buying this stuff, paying twice what the West will, shipping it back to China to refine it themselves. If the second largest producer in the world does this, then there is no reason to believe that maybe, or to not believe that maybe Samsung is doing this too. The metal that left the COMEX ecosystem, the 16 million ounces that just left, who bought that? And why did it leave? Could it be Tesla? Could it be Sony? Could it be Samsung? Hell yes, it could. And this is the concept of gift and good. As the price goes higher, they're like, dude, if we don't get this stuff, we're not making cars, we're not making phones, we're not making computers, go get it. And so, yes, this will happen. And I remember talking to Keith Neumeyer not too long ago, the CEO of First Majestic, and this might have been a year or so ago, where he said to me it was the first time he had seen industrial users like these companies and automakers go to the mining conferences that you and I have been to before speaking at, and disintermediating the marketplace, go right to the source. And so, yeah, I think it is highly probable. But I wouldn't. So anyways, the bottom line is China, Saudi Arabia, India, Russia publicly said they're adding it to their strategic stockpile. And when they said that, there hadn't been a government to ever say that. The European Union, by the way, made silver critical in 2023. We just did it. And now China is, in essence, doing the same thing and limiting exports. So I think while they haven't made it, gold will be the backbone of the monetary system. Silver is critical to build a digital ecosystem, one that also is needed in military componentry and in solar panels and in, of course, electric vehicles. So the realization, I think, quietly is, and they've been using the suppression of the Western price forever to to beat us at our own game by standing for delivery, all of these countries, but and to accumulate it on the cheap all around the world. But I think, it's just becoming more valuable than the currencies that are used to purchase it, but their actions, I think, show that.
Yeah. With that, you mentioned the China and going to miners around the world in South America and buying doré bars. David Barber asks, with that going on, with them buying the pre-silver, how long before that sort of interruption of the whole refining process hits us in a really dramatic fashion in the silver market, where now there's not silver and there's also not the components needed to refine silver?
Yeah, I mean, that becomes, this is a race to secure it all. That same AI character made a very interesting point about what's happening with the refiners. Now, I do believe this to be true, what he said, and that's why some of what he says is interesting. In that video, he said a lot of the dealers are out of product. I don't believe that. But what he did say was that one of the reasons that you're seeing the prices or the availability will ultimately become tough to get is that the refiners who take in all of this metal, let's say a refiner has $50 million of silver, they have to hedge that silver the way we do, right? So they take the opposite side and sell short in order to offset what they have long in their manufacturing process. And I don't know how long it takes to go from doré to full refined in a deliverable form. But if you have $50 million of silver in production and you have shorted the other side to offset your risk, so you're market neutral, if silver moves up very quickly, as it has been, $2, $3, $4, $5, you're going to get a margin call like that, and they're going to say, you owe us millions of dollars. We need it right now. If not, we have to close out your position. Well, they don't have the money yet because the silver's in production, so they can't take new business. But I do think that this is what will happen. This is the concept of given good as well, where higher the price goes, the more demand, because people start to freak out. They took for granted that it was always there and always available. And because the West suppressed it, it was always cheap. Now it's disappearing and it's getting expensive. And that is going to be a problem if we don't have the silver to make our solar panels, our Teslas, our iPhones, our, whatever. Yeah, I think that will become an issue, Kaiser. And it starts out slowly and then gradually, really starts to become an issue. And I think the entire supply chain is fragmented from the refiner all the way up to the mints, for sure.
One more question, I guess, about China, and then maybe we can do a quick shift, and then I know we're reaching our time here. But Christopher White asks, when you look at the Chinese Hang Seng index, the price is around 26,000 CNY for silver. And then he's doing the conversion and going, well, this isn't matching the Chinese price for silver versus the U.S. price for silver that we see on the COMEX.
Couple dollars
seems to
higher.
Be really different.
It's higher, and that's to attract arbitrage. The dummies who will buy it in New York and deliver it in China. That's what they'll do. And they've been doing that for a while. In other words, if you are a trader and have the ability to buy it around the world and deliver it using the COMEX price and then deliver it in China, you're making a hell of a lot of money on that spread. Well, but you're also giving away the silver that will never come back. So that is true. And there is a guy named the Oriental Ghost on X, Bai Jing, I can't pronounce his name, not even going to try. His first name is B-A-I, Bai, and then the last name starts with an X. He's known as @the Oriental Ghost, I believe is what it is. He posts the closing numbers on the Shanghai Exchange every day, and you'll see that silver is always a couple bucks higher there than it is here, which is specifically trying to entice the arbitrage to, we'll pay more money for it. Sure, send it to us. Thank you very much. Here's your dollars. And they would like to de-dollarize anyway, so they're using the surplus of dollars to buy up commodities around the world, which is why you would expect to see dollar use increase towards the end of the dollar's life as people are trying to hot potato it, get rid of it, and buy assets like silver. So I think that's what he's seeing.
Okay. We have a few questions here that all kind of touch on a similar thing about the way that the U.S. now is trying to position with digital dollarization and a digital currency, and then numerous U.S. states moving to treating precious metals as legal tender, and then the questions about Rick Rule's Battle Bank and Miles Franklin, having a relationship there with being able to lease your metals for BRICS. Through BRICS, excuse me. This is it's kind of a big topic, but maybe if there's a way, you're so good at weaving a thread between those kind of things. I thought maybe there's a way for you to address all of those in a cohesive manner.
Yeah, give me the questions one more time in order. So I know the Battle Bank. Yes, we will have. Rick will be in our BRICS accounts, and we would be able to, in essence, move the metal from the account that it's in your name to an escrow account held by Battle Bank once it's fully operational. And he will then give, I think it's somewhere in the neighborhood of 70% loan to value, somewhere in that neighborhood, against that metal. When the loan is paid back, the metal goes. And I sat down and talked with Rick about this, and he will open up in our BRICS facilities around North America and should be operational here first quarter 26. What were the other questions?
We had questions about that of going, well, isn't it better to hold your precious metals, personally? And certainly there's a value to that. But if you want to add this huge component of liquidity to your precious metals, that's a really good way to do it, right?
Yeah, so to unlock the equity within the metal itself. And, if that's something you want to do, you'll find most people who own gold and silver would rather bite off the tip of their pinky than sell it if they didn't have to. And this is a way to do it. And look, I trust Rick with my life. There have been very few people that I've ever met in my career that have been as instrumental to my learning and my success. And he's been a mentor, a friend, and I trust him implicitly. I think there isn't a better guy to do a program like this. But yeah, that's exactly right. I mean, look, counterparty risk is a big deal. Metal is in your own possession has no counterparty risk. It's an asset that, is simultaneously no one else's liability, as Doug Casey likes to say, and that's true. But, if you want to unlock the equity in it, then it has to be held at a place. And that's why I partner with BRICS, and because they're the premier name in the industry. And I've had 16 years worth of great relationship with BRICS and never getting angry or raising my voice. They're above board and very regimented in their rules. And that's what I want. I don't want any gray area. And so, yeah, this is a very cool program. And look, you don't need to hold all your metal in a facility. You hold as much as you can at home and hide it, bury it in your backyard, or become a midnight gardener, wherever you put it. But if that doesn't work, then I think our storage program is as good as any in North America. In fact, maybe better than them all because of the exclusives that we have been awarded through BRICS. So yes, on Battle Bank, I like BRICS. That would be secondary to holding it yourself, however, if you have the luxury of doing so.
We had then further questions on about the U.S. moving to digital currency and how that would work.
So that happens. I wrote down the date, actually. What you're talking about is the Genius Act. The law went into law on July 18th, 2025. Its rules kick in on the earlier of the two dates. 18 months after enactment, which would be January 18th, 2027, or 120 days after federal regulators issue final implementing regulations. In other words, the law could begin applying as soon as early 26 if regulators move quickly, or by January 27th at the latest under the standard timeline. And really what it is an ability to create synthetic demand for the U.S. Treasury. Because they will all be backed by, all the movement of dollars will be backed by stable coins that will be backed by treasuries short term, which will push interest rates on the front end of the curve low, make it easier to borrow money, provide synthetic funding for the U.S. government. Anytime money moves anywhere, whether you buy a pack of gum or a new car or whatever, each time you do so, stablecoin is created. When you pay and it gets to the end recipient, said stablecoin is burned. The interest on the treasury, however, is not transferable. It's kept by the issuer. Like USA Tether will be the primary beneficiary, and they've been buying gold at a level no one's ever seen before with all of their excess reserves. They have more gold than just about anyone but a central bank, almost 14 billion worth. And that fits into the theory that I've talked about on your dad's show over and over and over again of devaluing the dollar, debasing it. And there are reasons behind it, from paying down the debt and maybe bringing back manufacturing. And you have to hear the whole thesis before you poo-poo the bringing back manufacturing. But in essence, that is what they are doing. And it's funny because Bo Hines, who is the CEO of USA Tether, was Trump's crypto czar until August. And now he's the CEO of this new Genius Act compliant stablecoin that will back the movement of money. But you'll see all sorts of stablecoin issuance, and you won't notice any difference when you look at your Bank of America or Morgan Stanley or whatever account. You'll see money. When it moves, it'll be like moving money through Zelle or Venmo, just like that. You go buy a new car, you don't have to leave and go and send money by wire, go into the bank and do it. You'll just transfer the money instantly. The way people will notice it, it will get rid of checks and wires right away, and will just be instant movement of money. But you're not going to see stable coins, because as the holder of the stable coin, the interest that is backing it synthetically to drive down rates and to fund the government and to devalue the dollar through, I believe, buying more gold with the proceeds of those interest rates, because they're not transferable to the holder of the stable coin. So anyways, yes, it's coming, and it will happen no later than January 2027 at the latest.
And on that, we had some questions as well about what does a I've heard it referred to as a parallel economy of gold and silver transacting look like in when we don't have a U.S. dollar currency, when it's digital, and then as we see more and more states adopt, return gold and silver as legal tender again, how does that affect the day-to-day of how people use it?
It's not digital. I mean, it is, but it isn't. You won't notice it. It's the background that is digital. It's just how fast it moves on a blockchain network. And it does. It's like a central bank digital currency in a stablecoin clothing issued by private enterprise that is being monitored on the on-ramp and the off-ramp by the feds, and using the interest to, that is generated, or the sales of treasuries on the front end generated to run the government synthetically. It's a scam, if you ask me, more than anything, but you won't notice it. But what will happen is that when you hold down interest rates but create all of this inflation, there is no pressure valve. And that pressure doesn't vanish. It just shows up somewhere else, and it'll be not in higher yields as they're held down synthetically, but in higher prices. Inflation will become the release valve. And, with spending still out of control, and now the Fed is drifting back towards liquidity injections and getting rid of QT at 150% above their inflation target, it's no surprise that we're seeing confidence in U.S. debt starting to crack. But I digress. Bottom line is that it's not moving to a full cashless society, even though we're moving slowly in that direction. It's just about how fast money will move. That will be the convenience of it, at the same time providing synthetic demand for U.S. debt short term. So, as far as the states are concerned, these states are I think Texas is leading the way with what it will look like. Texas, you'll deposit American Gold Eagles or Silver Eagles or whatnot into your account at like the Texas Bullion Depository, and they will issue an app that will allow you to buy stuff using your app, or like the Glint app, which is a MasterCard. They'll give you something like that. There will be no capital gains tax in the state of Texas when you use it for commerce. If there were any, or any of the states, but federal still has to get on board with this. So that's the one drawback, is that they don't care. They'll still want their tax unless we get to a point where they remove capital gains on purchases of legal tender in this respect. So in essence, you're not going to go door to door with Gold Eagles, I don't think. In essence, you'll put them into a vault state-sponsored and be given some form of a digital app to transact on. But when you have gold and silver outpacing, the dollar's down 9% against the dollar index. Bad measuring stick, because of Triffin's dilemma. All those currencies deflate or they devalue their currency against ours. We use gold and silver as a measuring stick. The dollar is down 60% against gold and 100% against silver. That's a better measurement. So as you might be paying tax to sell this stuff, but you're appreciating so much that you're coming out ahead holding your money in gold and silver.
Well, Andy, we've got a ton more questions, but I know you've got other appointments to get to. You've given the answer.
Yeah, I would love to stay and do this, but I'm on with Sarah Westall 4 minutes ago.
We got to let you go, but
I need to run. Yeah, but I like the Q&As. I love the questions, and it's nice to see you too, Kaiser. Been too long, but say hi to the family for me, and thanks for having me on. Happy holidays to you and everybody out there, and it's coming close here to Christmas and the New Year's and whatnot, but happy Hanukkah. I think it started yesterday, so look forward to doing it again with you, my man, and all the best. Thanks for having me, and stay well.
Our pleasure. Thank you. And all the same to you, all the same well wishes, and look forward to seeing you again very soon. So thanks so much, Andy, for your time.
Take it easy, bud.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for December 15th through December 22nd, 2025, while supplies last. First this week, half-ounce gold U.S. Eagles are just $170 over melt per coin. Next, 2026 1-ounce silver Canadian maple leaves are just $5.75 over spot per ounce. 100-ounce silver bars dealer's choice are just $2.25 over spot per ounce. And finally, call and ask about our Christmas special on 90% junk silver. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.